We turn our attention to Nigeria now, where we saw shares in UBA, or United Bank for Africa, rise by 4.8% yesterday as investors reacted positively to the 67% profit growth the bank had reported for the first half of 2011. Figures ended June 30th. For more on this performance, we cross to Lagos now. We're speaking with Emmanuel Nnorom, who's Executive Director of Finance at UBA. Thanks so much for your time.
Thank you.
All right, now let's talk about the fact that investors are generally impressed with your profit growth. They're generally impressed with the income statement and the strong financial position. But some have raised a few concerns and said, you know, at gross earnings of 87 billion naira, it's still 6% less than what we saw for previous figures or previous years. Why is that?
Basically, we had a lot of some loans to the manufacturing sectors that are refinanced under the Bank of Industry facility, which, as you may be aware, is priced at a maximum of 7%. I mean, for our customers, that's a welcome development that we were able to take them through that process in order to have a long gestation period for their businesses, which is also important. This all impacted on our net income for the period. Apart from that, we also had the increase in loans you have seen at the end of the half year arose largely from the last 2 months of that quarter. So in a way, this is actually like a process, a growth. So these are the major issues. But I think in the next quarter, you're going to see quite a lot of change, really, as we have so many other new transactions coming through.
Okay, talking about the improvement in the loan book, absolutely, the figures are very good, up 14% or so. But there's still some concerns that have been raised. You know, your loan deposit ratio up 51%, but still the feeling is for a tier 1 bank, it's an underperformer if you compare it to that of Zenith Bank. What do you say to that?
I think Zenith, yes, may have their own strategy, but UBA, we have been conservative in terms of growth in loans, but we're actually, doing so well with new transactions that we've gotten into. What is important is the fact that our loan deposit ratio is improving. Before now, it's been in the range of 40–45%, and you can see the gradual growth that we have engaged in the last quarter. So I think it's just a welcome thing, and we'll continue to grow. But more importantly, is that in lending, we also have to ensure that whatever you do today, that in the next 2 to 3 years, we don't have that issue arising in terms of provisions. So it's something gradually we're growing, and also ensuring that we have appropriate risk management framework in place.
I mean, obviously, talking about that risk management framework, talking about that caution and gradual approach that you're talking about, does it have something to do with the capital adequacy requirements, the new minimum standards introduced by the CBN? Talk to us about how a changing regulatory environment is impacting on your business.
No, it has nothing to do with any capital adequacy requirements. The bank is well ahead of the minimum requirement by central bank, even as an international bank, so it has nothing to do with that. It's more to do, and then we don't even have issues with any of the regulatory provisions. As you must have noted, UBA always complies with everything that is required. That is why even in our financial statements, you will not see any penalties being incurred. We still have a lot of room to grow on our loans for the rest of the year, and I believe the capital adequacy is not an issue for us at all.
Now, you've said that, in terms of asset expansion, you've managed your risks, and you do expect that going into the second half of the year, you'll still be looking pretty good. Explain that to us.
Yes, very well. The markets and the economy is a bit stable now, and we believe that all the plans we have put in place across all our network, from the Nigerian bank doing very well, the non-bank subsidiaries are contributing significantly. Africa has also turned positively. In the last half-year result that we had, 11 out of our 18 countries have all posted profits on month-on-month. And the remaining 7 are just countries where we've had operations for less than 15 months, and we are seeing also results coming positively from that. Africa is really a success for us.
Right.
Also, our investment in joint venture projects are all doing very well. So we think that the rest of the quarter, for third quarter and also for the rest of the year, will be also good results.
And finally, Mr. Nnorom, we do know that when it comes to curtailing operational costs, you've reduced some of those costs by 2.4%. And we also know that there's been a management shakeup to try to make UBA a more efficient operation. Talk to us about that strategy and how it's going to make you run better going forward.
Our cost-income ratio has improved from 86% last year, 81% in the first quarter, to 77%. We'll see more improvements coming from that as we drive up revenues, as the loans continue to grow. The shake-up in management is not really a shake-up in the sense that there's anything to do with the management performance and so on. It has to do with the fact we are trying to comply with the requirements of the central bank on the universal license that was repealed some time ago. As you know, we have opted for a holding company structure with some other banks that are also doing that same line. And in the process, we have UBA Holdings as the main vehicle, and then you have the UBA, the bank, you have the Africa Holdings, and you have the Capital Holdings. That's actually the structure that we're trying to put in place that led to the recent changes. It has nothing to do with performance. In all, it will produce more results for the group.